Ray, the CPA. I want to talk to you. This is going to be the first of many because it's such a broad topic. But let's talk for a bit about not-for-profits. So, the Section 501 of the IRS tax code talks about how the IRS deals with an organization that's going to be exempt from taxes, right? So what taxes are we talking about? First, we're talking about, for the most part, we'll keep it real simple in this introductory video, but we're talking about federal income taxes is really what we're talking about. Sales tax, they're exempt from taxes. Now, the way that they become exempt from taxes are in their articles of incorporation. They have three criteria. So those criteria are: purpose of the organization is justified under IRC 501. That's the Internal Revenue Code. The organization's assets must be permanently dedicated to that purpose. Meaning, so again, a not-for-profit, not a profit motive. The purpose of the organization is to do a certain thing that's allowed in the IRS 501 code, and everything that they make has to go toward that. You can't inure. I don't like jargon because this is supposed to be simple and make things simple, but inure basically means INUR. It means to benefit an individual or special interest. Okay, so not for profit, those are the two. Now the third is the organization's activities are limited to those in the purpose. Okay, so its assets are dedicated. It has a purpose that's outlined in the IRS code, and all the activities are defined are working toward that purpose. Okay, so everybody that's employed at that organization dedicated to the purpose. Every function, every expense ultimately is leading toward that purpose. All right, so the key differentiation, so 501Cs have 501Cs, that section identifies 29 distinct groups as of today, right? We're going to talk about a little bit about 501c3, the charitable organization. So a charitable, non-profit, religious, or educational organization is a 501c3. And what differentiates that particular organization from some of the other 501s, so not only are the 501cs, but from the 501d through Q, I believe. What differentiates a 501c3 is that its donors donating to it can have a charitable contribution claim on there. So I can use a deduction for giving money to that organization. That's not always the case with other not-for-profits, right? So if I donate to a nonprofit, and I use that term interchangeably, and that could be correct or incorrect, but that's what I do. Not-for-profit, nonprofit, I use it interchangeably, and for our purposes, I think that'll work. But remember, a 501c3, my donation to it, I as the individual donating or the person granting can use that as a charitable deduction. That's a key. Another key for a 501c3 as opposed to, let's say, a 501c4 is that a 501c3 has special regulations regarding like lobbying, right? So typically a 501c3 has a disclaim, I use this little percentage for lobbying, but its main activity can't be lobbying, as opposed to a 501c4 like the ACLU or the NAACP. They can use their funds or use more funds toward lobbying or activities like that, or a 501d. A 501d as opposed to a 501c3 church, let's say, because a 501c3 can have a charitable, nonprofit, religious, or educational organization, but a 501d is going to be like a commune or a farm where they have a community pool together bit of money. A 501c3 church can't lobby, 501d can. So anyway, simple about not-for-profits. Let me see if I forgot anything else. This is just a taster. This is just a little hors d'oeuvre on not-for-profits, because there's so many of them, and it's one of the focuses of what I do, small to medium businesses and not-for-profits. So I went kind of fast. Keep your questions coming. We will talk more about this. I promise. I'm going to actually start a nonprofit playlist and keep it there. I have a business advisory playlist, but this is more instructional, so we'll work that out. Tune in, subscribe, interact. All right, Ray the CPA, I'm out.